Hello traders, welcome to your daily market update for Friday the 17th of April 2015, and overnight we've seen a euro short squeeze. We had euro weakness where we had fears of a Grexit, we had weaker German data, and we had all-time lows on German bond market. So why did the euro go up? Well, we had a short squeeze, and that's when you've got a lot of positions and everybody's anticipating the euro to go short. And when the whole market is flooded to the downside, there is nobody else to continue selling, to continue pushing it lower. And the US dollar was the dominant player in the market last night. So with the US dollar coming off and having a pullback, and I'll talk more about that in a minute, there's only one place for the currency pair to go, and that is up. So the euro versus the US dollar had a short squeeze where people that were short had to readjust their positions, exit positions, and some were starting to get on long. So that's what we call a short squeeze. Even though we had weak data, the market moved in an opposite direction. Now the US data was weak across the board. We had weak housing, weak building permits, weak jobless claims. We did have a stronger Fed Philly later in the night, but it wasn't strong enough to support the momentum and the sentiment in the market. We also had Fed Lockhart put the nail in the coffin when he said he supported a later rate hike over an earlier one. So right now the market is really building momentum and calling a top, and it's going to be interesting to see what happens and whether the market follows through, as we are meeting an important juncture on many currency pairs on the technical market, and we'll have a look at that in a minute, and we'll discuss exactly where they can go. The Canadian was the other big story. It's been the big story for the last few days. Now we've seen oil formalize a bottom pattern, and I'll show you that in a minute on the charts. We'll also, the US dollar weakness. So all those things combined, we've seen the US dollar versus the Canadian dollar break a major support level, and it also formed a major top. So it's still in focus tonight because, as you can see here, we do have some more data coming out tonight, and it's going to be all eyes on both the US dollar and the Canadian dollar tonight to finish off the week. We do have a little bit coming out in the European session with Consumer Price Index out of Europe, so that'll be interesting to see, although it is expected to be quite flat and subdued. And we'll have a look to see what happens with the pound data. Right now, I think that there's no surprises expected to come out of that data at all, but we'll wait and see. And any weakness there could help form a top in short term going into the weekend. All right, let's have a look at the dollar index. And as you can see, the 34 exponential moving average has been support now for the rally since July, when the rally started, and it keeps pulling back and bouncing off these levels. We're starting to run out of momentum here, and we've now got a lower high, but we haven't taken out the major lower low. So right now we're still in an uptrend, but momentum over the last few days is really pulling back, and we are now testing the 34 moving average. It doesn't mean we can't go through it a little bit further like it has in other occasions, but it's just coming to the point of a juncture, and we'll have to wait and see what the market does and how it reacts moving forward. It could finish the week bearish. We've had three very strong weekdays in a row, so we'll have to wait and see what happens on the weekend. Coming into Friday, people could be taking their positions. I definitely don't expect it to break this level, so we're still hovering around in this region here. Let's have a look at the charts, and I'll get back to oil later. We're now looking at the New Zealand versus the US, and we've started to see some higher lows and some higher highs. So technically this is in an uptrend, but it's a very slow uptrend. We haven't got momentum yet. We're just slowly grinding higher. We've had 3 bullish days, and we're testing 77 cents. 77 cents was a very strong support level there for such a long period throughout September, October, November, and December. So it's going to take a big push before it actually breaks that level. We'll have to wait and see what happens tonight, but that's a major level for you to be keeping an eye on. Now, but for now, it does look bullish. And if I draw a downtrend line for you, you'll see here that the downtrend line is acted as support, and we've bounced off it going up. So right now, it is in a bullish momentum. It does look like the US dollar is losing steam quite quickly as the market all jumps on board. This is the downtrend of the daily Australian dollar versus the US. As you can see, major resistance here is at 79.5 cents. But 78 cents is also a point where price action has been undeciding where it wants to go. So once again, just like the US dollar and the New Zealand dollar, we're at a point of juncture here. It's going to be interesting to see how the market reacts. Revolving around this, a break above 78 cents could definitely mean it can come up and test this point here, and we'll move up into trading into this band for next week. The euro versus the US is still in a downtrend, but we have had a series of 3 consecutive bullish days. And we're by no means looking to test the highs of $1.10. That's a major level that we've spoken about many times before, but we've had a bounce off the bottom and we're still within this consolidation range. Now, if fears come in and Greece don't get their act together, the selling of the euro could kick in and we could see it actually continue to slide. But that's something that can happen really quickly as news breaks and Greece decides their own fate. The Great British Pound is coming up and also meeting a very important level of $1.50. Now, $1.50 here was strong resistance since March, and it was strong resistance over here in support here in January. So it's going to be very interesting to see whether the current momentum is going to be able to get it to break $1.50. We've had 4 bullish days all in a row, and we'll have to wait and see whether the momentum continues. So we've got the New Zealand, the Australian, and the Great British Pound, and the US dollar index, all at some key junctures. It needs to make a decision what it's going to do off these levels. So keep an eye on those levels and don't try and preempt the move. The US versus the Canadian dollar, there's no doubt, I've spoken about this, we had a major break of this major support level. It was $1.24 was the market level. And now that we've broken it, it opens up moves to the downside, especially with oil bottoming. Now, oil bottoming, by that I mean, I'll go over to the chart. Oil formed a W pattern here, or somewhat of a double bottom, and we've now broken that neckline. The whole market has recognized this, so when everybody recognizes this and everybody's looking at the same pattern, it's quite a big move and something that indicates that we have made a bottom in oil and we are looking for stronger prices or higher prices. For the meantime, this does offer support at 54, 55 cents. And we'll have to see if momentum can continue or whether it consolidates around this region after such a strong rally over the recent weeks and months. But for now, it definitely looks like oil's bottomed and everybody's talking about it, so the focus will remain on that. In terms of the US versus the CAD, if the US dollar weakness continues, well, this can fall a lot further yet. And I've spoken about this, well, this is when the rally started and then we've consolidated and we've run out of momentum as oil. Now this is purely an oil move. It's got nothing to do with or a little bit to do with the US dollar and the US dollar strength. And then also oil tanking, so it was just a perfect storm. And then now that all that's resided, we've consolidated and it's decided it wants to pull back. I usually pull a Fibonacci and look for historical support and resistance levels. And for me, you've got a level here and then a level here. I think historically speaking, if I'm right, the Fib 50 is the strongest level, as we've had support over here in July 2009, 2007, 2005, and as you can see, 2004. So as you can see, that's the most that we could pick up because this has just broke through all the barriers installed before it hit 2008 highs. So a pullback could actually come back and test this, but it's going to be up to oil and up to the US dollar. I don't like to forecast that far ahead, but let's keep an eye on it. And we could actually get, if we get a bounce in the US dollar in the short term, we could come up and test the bottom of this major resistance level or support level, which would become resistance before we actually carry on. So keep an eye on that. Don't just jump in now and try and catch a falling knife because the chances are it can buy you unless you're happy with the risk that it entails. US dollar versus the Japanese yen, it's holding up quite well. Now we've seen big selling in the US dollar, but the US dollar and the Japanese yen has sold off but not broken through any major levels, and we're still trading at $1.19 and it seems to be a really strong level. However, if it's broken, we will see it fade away to the downside, and once again that's up to the US dollar index. Well, that's it from me today. That's it for me for this week. I hope that all the videos have helped with trading. Keep an eye on the US dollar index. That's what the market's following. It's all about the US right now. That could shift at any point, but for now we'll focus on what the market's focusing on. Have a great weekend, and I'll be back again next week. Until then, trade well.